Yo, what's up, guys? It's your boy Looney, and today I want to break down why this past week has been one of my strongest in a while, how I handled the volatility, and why buying when everyone else is terrified still works if you're patient and strategic. Because last week, the market looked really bad. There was red candles everywhere, crypto was bleeding, you had fear spiking, you had the fix ripping higher, and sentiment overall was awful. People were talking about bear market 2.0, recession, doom scenarios, all of the usual. But here's the thing. That's exactly when opportunity shows up. And while most people were panic selling, I was personally doing the opposite. I was staying calm, dollar cost averaging, and selling puts while volatility was elevated. And now fast forward to this week, my count is up around $5,000 just from sticking to the plan. Before we jump deeper into this, quick shout out to the Discord. It is free to join. And then I also offer a premium membership for $8 a month where you get one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. And I also have a referral link to Moomoo where you get some perks. You can get up to $1,000 of NVIDIA stock, and they have a good idle cash offer with 8.1% APY. Obviously, offer terms and conditions do apply. So check all that out in the description. But let's talk about what actually happened, because last week was rough. And if we just look at the VIX, I really like looking at the VIX for overall sentiment. You can look at the fear and greed index. There's other different indicators and charts you could look at. But because we're on Robinhood, I thought I would show this. But we could see how much the VIX really spiked last week. It is showing that we were up 27 at one point. And obviously, stocks were getting hammered on the other end of this. So I wasn't predicting a bottom. I wasn't also trying to time the market. And I'm not pretending that I know what's going to happen next, because in actuality, the VIX can go up really indefinitely. The highest we've seen it in April was 52. And again, this isn't the only indicator we're looking at, but the market overall can go lower. But really what I was looking at was this was some opportunity, because I was seeing RSI was sold off, price were breaking down, overall sentiment was collapsing, and there was just overall panicking. And this is really when conditions where the premiums are really good, where selling options become high probability income. So last week, while volatility was spiking, I ended up selling puts on stocks that I was willing to own anyway. Now, I was doing it on Webull. I was doing it on Mara. Obviously, you want to be looking at stocks that you actually want to own. So that's where your own due diligence comes in. And this isn't financial advice, but I was doing it on these stocks. I still have some open on Archer as well. So I was selling a lot of puts. I was acquiring those shares. I just got acquired shares of leverage positions on HIMS and CoreWeaves, and now those are starting to do well too. So also what I was doing was DCAing. I was dollar cost averaging into my long-term positions on crypto and my stock of Robinhood. I also invest into Robinhood. And you could also dollar cost average with selling options. That is exactly what I was doing with Mara, for example. I have a bunch of cash secured puts that I'm running at different strike prices, different expirations, and it's essentially a dollar cost average strategy. But if you don't have that cash, you can just simply buy outright with shares or crypto. And you can see I wasn't really trying to be a hero. These are on the safer end of trades. Now, these aren't super safe, but they are strategic allocations, and I'm not going all in on these plays. One of the bullish trades I did end up doing was a leap call on Mara. This one is a little bit more bullish, and I wouldn't even say an all-in trade. I only put up $500 to do this trade, and on my portfolio, $500 is around 1%, so keep that in mind. It's about 1% of my entire portfolio, and that's how I allocate some position sizing. And we fast forward to this week, and I'm up. I'm up pretty significant, up around 8%. And that's super important. I want to actually stop there because last week, a lot of people might have said they're buying the fear, they're trying to wait till we go lower and all that, but you can't time these things. Really, you just got to take advantage of what you have available to yourself. And that's what I tried doing. I didn't go all in, but I did make some trades and I'm able to capitalize if we go higher, but I'm also prepared if we go lower. And that's why I was very strategic with the strike prices and my expiration dates and all the different trades that I made. So the market did have a really strong week. And because I positioned during the fear, everything has sort of recovered pretty nicely. My cash secured puts are up pretty good. I mean, Webull, I was going to get assigned at this $9 put, but who knows, next week or 2 weeks from now, I'm not too sure where this is going to be sitting at, but maybe I'll get assigned, maybe not. Either way, I'm okay with either outcome. My DCA buys from last week are also doing pretty well. The DCA buys, I don't focus too much day to day because they're automatic, but I thought I'd at least note that. Also, my total options on the week are up around 6%, and then on the month, I'm up only 1%. I need to go to my 1 month actually realized profit. I'm up 16%, and then the 1 week, I'm up 50%. So pretty good. And then overall, I am up around $5,000. So this is where discipline beats emotions because fear is temporary and value is not. Now, I am aware that this can continue to go downwards and this could be a bull trap, but I'm okay with that because I'm not suddenly just turning euphoric. This still can turn into a dead cat bounce, a bull trap, a retest of the lows. And if that does happen, I'm ready because I am a patient investor. And that's very important when you're investing is to have patience because these bear movements or this bear market can last months. And really it's about survival and how much you can withstand all this headwind. And that's why having cash on the sidelines is important. And I still have that for my disposal. So I'm not overextended. It is saying that I am using margin. Now, I am not using any margin currently, but if the market does go lower and we do go into a bear market, then I will most likely get assigned my shares or assigned on my options, and then I'll have to use some margin, which isn't the worst thing in the world, but that's why it's showing that I do have margin, but I'm not using any of that margin right now. But if we do go lower, I'd be happily buying fear again because the market always rolls back and it might take a while, but if we do drop again, I'll buy that bear movement. It's a very simple strategy. I'm not overcomplicating this. I'm not trying to time it. I'm simply just taking advantage of what the market gives me. But on the other end, if this is a true bull continuation, if we do see the sort of momentum, I'm also ready because I prepared or I got assigned these weeks. I got assigned shares. I'm holding and I'm dollar cost averaging because my trades are already in motion. I'm not missing out on these gains because if I were to sell a put right now, the premiums wouldn't be as good. The strike price wouldn't be as good either. And overall wouldn't be the best trade setup. So my DCAs are also grinding or gaining as well. My cash secured puts are doing pretty well. And now if we do go higher, I could sell covered calls to lock in some income while still participating in the upside. And I actually did end up doing that. I rolled a covered call on Riot. If we just pull that one up, I made around $400 just from rolling it from the $16 call to the $18 or $20 call, and allows me some upside if Riot does decide to run or runs a little bit to that $20 mark. I do have some cushion, and we'll see what happens if we do go further up. I'm sure I'll be able to strategize it and figure out what to do next. But that's really the beauty of a balanced plan. You plan both outcomes and you're able to benefit from both scenarios. So whether this is a beginning of a massive reversal or just a breather before another leg down, my approach isn't changing. I'm buying the fear, not the hype. I'm selling puts when volatility is high. I'm dollar cost averaging when prices break under my cost basis. I'll sell covered calls when things get hot. And I always keep cash. I'm always keeping cash ready for opportunity. So this week was a win, And not because I predicted anything, but because I stayed disciplined when the market was emotional. So if you found this video helpful, drop a like and comment how your week went. I'm very curious. Did you buy the dip? Did you panic sell? Did you stay patient? And until next time, peace.